How much would you say that you brought in AUM from the book?
Any number I give you was just strictly going into world-class venture deals, direct private investments, and that's hovering around $50 million. People automatically will gravitate towards you because you have some sort of a different tone, but also you got to think today, attention is the new oil.
You are giving them permission to follow what's already inside of them, but they've been hiding from themselves.
When people trust you with their money, they trust you with their soul. He put my book on the Jumbotron inside the strip club, and everybody said to me, you're an author.
Was there a specific moment or a shift that you knew that you needed to do something different?
I needed to capture attention in the most raw way possible. That's what really came down to it.
You have to have this because this is what's going to make sure that you can first know who these people are who are buying your book. And then second, you will be able to build a relationship with them.
I think too many first-time publishers think that they're going to be the next J.K. Rowling. Or the Michael Jackson story that said he did it. And after you watch that, I was convinced he did it. And then I watched another one that said he didn't do it. And after that, I was like, he didn't do it. I was blindsided by the persuasion of what I call the documentary effect.
If you could speak to your 22-year-old self, what would you say?
You made the right decision.
There's nothing more vulnerable than trusting your family's wealth, your legacy with someone to invest.
There's a lot of wealth that's going to be transferred, and a lot of people have anxiety over that.
Hello, welcome to Thought Icons Podcast. I'm your host, Andrea Albright. And today we are here with an incredible guest, Salvatore Buscemi, and we like to call him Sal. He is a fund manager, family office, and venture investor. Welcome to the show.
I am so happy to be here. It's a privilege and a pleasure to be here. Thank you. Thank you so much.
Well, you came all the way to Beverly Hills from Miami, Florida. How was the ride?
Thanks to you, it was very comfortable.
Well, we aim to please.
Very comfortable.
But the best.
Yes, very comfortable.
We have so much to talk about today because we've been on quite an adventure and a journey. It's an honor to be your publisher and your partner. Let's talk about how this all started.
You know, it's interesting. I started my career as an investment banker at Goldman Sachs, and not too long after I started, I went through some trauma where my father passed away earlier. And what I needed to do was, before you turn 30, what you want to do is something entrepreneurial. And so I made a promise to myself that I would. And at the age of 29, I raised $30 million back in the day when, that's the equivalent of 100 today, from a Park Avenue investment manager. And I was just continuing to build a brand. And as I continued to build a brand, I raised another institutional fund. However, when you make the move from working with institutions to families, you discover quickly that they have different interests. And at that point is when we had a lot of success in our venture portfolio, moving from real estate into other things. And we needed to put together somewhat of a thought leadership or an authority type of publication where it would be the handbook, the de facto handbook for how families, what they should expect. There's been tremendous wealth creation, let alone over the past 5 years, but more so since the age of Amazon, over the past 30 years. And that's really transformed people and have given them so much more wealth that they never thought they would ever have. And plus you also have the next gens that are coming too as well. And, they don't really know the lay of the land. And all they know are what their friends and family tell them. And usually that's to their benefit, not to, the person who's inheriting all the money to their benefit. So it was interesting because you and I were going back and forth on this for a while. I'd published 2 books before, but really didn't have much fanfare behind them. And I was really interested in the way that you put things together and how I'd be able to credibly make an impact into an industry that is very fragmented and very misunderstood. How would I do?
That was amazing.
Okay.
Thank you for your background. And when we met, you had already published 2 books. And as you said, it didn't really make the impact that you wanted. But you knew that there was more to say and more to share. So when we started to collaborate, all of these amazing stories started coming out. Can you share more about that?
Yeah, I think what was interesting is that there was another traumatic time in my life, and that's when I went, and I remember calling you from the Hamptons and saying, I'm going to send you the wire, we're going to go. And what it was is that my mom had passed away, and I had wrote a book, and it sounded like someone else had wrote it, not me, right? And I was it sounded very institutional. And I remember talking to you, and this is the big point that turned everything around. And you called and you said, how's it going? How's it going? I'm like, fine. I'm like, everybody's calling me to send their condolences, and people who I haven't heard from in years professionally. And you said, that's interesting. Why don't you put them in your book? And so you and I put together the convention of the book that I would say something absolutely off the wall and wacky, but I would have someone maybe from, like I said, on the board of a company with a Rockefeller, for example, in Boston, have him corroborate that, or maybe former Goldman Sachs partners and people who I worked with and people who I currently work with in larger families to sort of corroborate that this is the way of the world. And because I had that trust with these people at that time, I was able to really bottle a lot of magic, if that makes sense, and that was making a big impact. And of course, there's a marketing angle to that too, because whenever you ask anyone to be in a book, they're going to send it to all their friends, and I'm sending publisher copies, by like the hundreds to people, and then other people want to copy Sal. Like we brought in another prominent family office, Marco Soriano, and Eric Metzger too as well. So it's really been a thought leadership wave that has taken over, I think, the industry that's much needed actually from authorities who have a lot to offer as it relates to experience, but also network.
Amazing. And today, what has the book done for you? How has the book positioned you differently in your industry and also across multiple industries?
It is interesting because when you give someone a book, especially a member of the opposite sex, you sort of get a different attention, right? And when I first moved to Miami, it was right during Art Basel when I landed, and I just remember I would go to parties and I would just bring my book and a Sharpie. And anyone who I thought was of any consequence, like someone like a family or someone who I needed to know, I'd bring the book. To them, that's meaningful because you're giving them a piece of your life, right? But there's another dynamic too as well, is that you're inviting them into a community that has essentially a documentary effect because no one's challenging your views. It's all one-sided like anything else. And so we were able to build a strong community besides the financial aspects and everything with it. We were able to build trust very, very quickly in an industry that kind of has some unscrupulous people in it, right? And it's a way to distinguish myself, but it's my business card. I don't carry business cards. I tell people when I go on podcasts, like this, but also smaller ones, not nearly as big as this, that if anyone wants a copy of my book, they're more than welcome. Just send me an email, put your address there, or I'll send you a digital copy.
And so how many people have been impacted by your book so far?
I think the best way to think about that is if you were to look at the reviews on Amazon, if you look at the emails that come back to me when I give someone a free version when they read it, they really do want to read it because it's not just the title, but it's something that everybody doesn't know about but wants to know about. Like what is really happening? We talk about investing legacy, how the top 1,000th 1% invest. That means in the United States, that's only 2,300 people, really, when you think about it. What are they investing into? Are they following good old Warren Buffett's advice? Are they going into ETFs? And of course, I think, when you hit that level of wealth, you have different expectations, but you also think much further down the board because now that you've hit it, you're looking to build a legacy for yourself.
And let's talk about how we came up with that hook. The title of the book is really what captures the audience. Mm-hmm. It is the headline, it's the hook, but it has to grab them immediately. And can you tell the story?
I remember the story, yeah. So I remember you and I were at Pelican Hill and we were sitting outside and I was saying, this is interesting. Like I have an idea here, but the best way it is, and the reason why you were so helpful is because there was a dichotomy between the sexes with wealth. Women were always asking me, they would, I'd go out to meet them. Their husbands or boyfriends really wouldn't care. They're too much into crypto. They're too much into building an identity around something for themselves. Whereas the females today have a lot more control of wealth than ever before. And so they would be asking me a lot of these questions during lunch. And then I just remembered, why don't I just do it from the standpoint of like all the questions that people have been asking me, mostly women. And that's another reason why I wanted to go with you too, is because we were really going after that demographic, because nobody's catering to that demographic as it relates to the interests and concerns that they have with building a legacy. It's not just preserving wealth. It's always about preserving wealth, but that's table stakes. It's what else are people investing into? And what about this family you told me that put their name in red copper lettering on a library on the side of the 405? Like, can you, how am I able to get to that? Really, am I able to do that? Am I at that level? A lot of people think of yachts and all sorts of discretionary expenses, but the real legacy is what do you want your parents? The real legacy is what do you want your children and grandchildren to say of you after you pass?
That's so powerful. And that phrase, investing legacy, those two words had never been put together before. And we got the URL, we have the domain, and you've built an entire brand.
Yeah. Yeah. It's great. It's actually, I don't call it is a brand, right? But I think of it more as a community today. We were talking about the rise of membership clubs, correct? Since the pandemic, there's, I think also that like if you do put out a book, for me, that is like the starting point for anything else that I want to do. For example, I want to start a podcast talking about this, right? That's you read the book, here's the rest of the story. Same thing with a newsletter. Here's the book, here's the rest of the story. And it works because you give someone something that they can depend on, but it's also a sense of community. And I think a lot of people don't understand if that somebody writes a book or, and to me, I'll give it to people, but I'll be like, give me your number and your information, and I'll give you a copy of the book. And, if they're like real investors and, not people who are playing investors, I'll follow up with them because it's like, hey, what do you think of the book? Would you mind leaving a 5-star or no? Would you mind leaving a critical Amazon review? And then I send the link and sure. At that point, that's when the real conversation starts. And it's like, hey, I read it. This is great. And then they start asking me questions. And I love that because at this point, now I've, entered the story in their head and answering all their questions. And you become much more of a confidant. Does that make sense?
Yes, absolutely. And you understand this so powerfully, how the book is not the end. It is the beginning of the conversation to be able to open up the dialogue and the conversation. And then people can know you, like you, and trust you because they get to read your story and your values and what has brought you to be this visionary investor today. Right. And so how much would you say that you've brought in AUM from the book?
My CFO, who's sitting outside and co-partner, might not want to hear this, but we have purposely not gone into real estate because of the market fluctuations. We're going into that, okay? So any number I give you is just strictly going into world-class venture deals, direct private investments, and that's hovering around $50 million, which is a lot when you think about how risky these opportunities are. And, it's not quite Shark Tank, but it's, we don't invest in first-time founders, and we have other rules that we like to work with. However, those have a higher likelihood of risk and loss as compared to real estate. So I think the real question is maybe I'll have to come back, and after we finish a few real estate deals, you'll see that AUM number jump. But given the circumstances of the opportunities that we saw, we were able to bring a lot of investors into deals that they would never be able to invest in on their own if they had not read the book and connected with me. Does that make sense?
Absolutely.
Okay.
And this is a perfect example of how the trust factor, there's nothing more vulnerable than trusting your family's wealth, your legacy with someone to invest. And because they've read your book, they know you, they trust you, and they hear the stories of all these other family offices who have had a lot of success.
Yeah. It's really consequential too, because people today, there's a lot of wealth that's going to be transferred, and a lot of people have anxiety over that. They tell me confidently or confidentially over brunch at Zuma in Miami. They'll tell me, look, I don't know what's going on. This is to me like a blessing and a cursing. I don't want to lose it. I don't want to be the guy that throws it down the drain. And so this is sort of like setting to them the rules of engagement and what they should do to follow along to make sure that they're good stewards of whatever they inherit.
I actually learned this phrase from you and publishing your book with you, the third generational curse. Yeah. Can you explain that?
Yeah, it's something that's been around since, biblical times. There's a lot of wealth that's created. It took a lot of strength to do that, a lot of determination. The second generation didn't have to work as hard, so they were a little more, had a lot more fun, and they weren't really keeping their eye on the ball and really didn't have any sort of really understanding or driver to really continue the wealth. And then the third generation is the one that picks up the pieces and starts it all over again.
So by the third generation, that wealth that was created by that original innovator and visionary is usually completely gone.
Correct. I mean, Gloria Vanderbilt didn't inherit anything from the Vanderbilt family. Neither did Anderson Cooper, and he talks about that on, several articles that I've read. It's because they did not have a plan in succession, a succession plan, to be able to govern what happens next.
So let's back up a little bit. And before connecting with me and Beverly Hills Publishing, what was the biggest challenge that you were facing as far as marketing or getting your story or even having trust with investors?
I think, given, my background and pedigree, it's very competitive today. And I think what I needed to do is I needed real leadership to put together something, canon, if you will, as it relates to how, how people should think about different ways and how the wealth is being managed and what they invest into different, what I call, different spectrums of wealth, right? So you have a lot of people who have a lot of money, but they don't know who to trust. And so that book for me was sort of the de facto, here's my, story, here's how we work, here's what has kept me successful, and here's where we're going forward with it. And by the way, we'll add some fun into it because we had the 5 investing avatars in the end, right? So everybody would pick themselves,
Which avatar are you?
Yeah, which avatar are you? And that's another thing, that comes back. And they're like, I learned that I'm a provider. Or I learned that I'm a, curator or something. It really put together, when you put together a narrative like that and you're answering the questions in your reader's head, does that make sense? That's the most important thing that you helped me with. Because other publishers, and I published 2 books that were mostly technical, they didn't have anything to really offer except for, okay, this sounds great, we're going to write a how-to manual. And, that's fine for credibility in different ways. But if you really want to touch the soul of someone and get them to really, follow along with you, you need to put together, a good handbook or, telling your story. And that really, I think, differentiates many people today. I have people who I know who are writing books themselves, and they've had accomplished a tremendous amount, not just with capturing the attention, but also raising what we call AUM, assets under management, quite easily due to the fact that they had the book. And you've helped with that too.
Thank you. Well, the power of story and storytelling, it works across every industry. And these are stories that people will be telling 100 years or 500 years because it brings humanity together. Yeah.
One of the things that's interesting is that you'll get feedback and it's like, hey, I remember when you said this one thing about you being quant-splained by a guy with bad breath, trying to get you to invest in a life science deal. And like, quant-splained, I love it. The guy's like, he just won't shut up. He can't take any social cues. And, you're eating a rubber chicken lunch at the Harvard Club, right? And he's just, going on and on. It's really interesting, right? But those are the things that stick, right? That stick. You'll see that and somebody will post that on like one of my LinkedIn things, like quant-splained, great ones out. There's a lot of gems in there, of course. But, I just put it all out on the table at that point.
So was there a moment or a shift that you knew that you needed to do something different in order to amplify your brand and your message?
No, I needed to capture attention. I needed to capture attention in the most raw way possible. That's what really came down to it. And that's what I was thinking about, because anyone can put out these books, and I've been to, I've been to family office conferences now for almost 20 years. And, you have these people peddling their books, but they're mostly like people talking down to you, but they don't have any wealth. So why do they qualify to even talk in the first place? So I wanted to put it together like, this is my experience. I'm corroborating it with people who are far more successful and bigger than I am. And I think it's something you should pay attention to. And that was able to suck the attention out of the oxygen out of the air, rather. Because what it does is that people automatically will gravitate towards you because you have some sort of a different tone. But also you got to think today, attention is the new oil.
Ooh, I love that. Did you just come up with that phrase?
Just now, yes.
I've never heard that before.
Right,
that was some gold.
Yeah.
You're dropping gold even as we are creating this podcast.
Thank you. I appreciate that.
Well, that's what being a thought icon is all about,
yeah.
Right? You're constantly evolving the conversation. You're creating more value to the narrative of your industry,
That's
and
true.
you're giving words that help others understand.
Well, there's another thing, too. If attention is the new oil, then interactivity is the new currency. And that's really what we do with Brahmin Partners, is that I always want to make sure that, look, if you want to be onboarded to our family office, you got to read the emails. I am on top of you. We're interactive. We're on top of our families. We have 14 families, and then we have a bunch of other investors who are not quite family offices, but they do like to invest in our deals. And this is, this it sort of establishes the rules of engagement, the rules of the road, and it frames the boundaries of the relationship with your investors.
Well, and you do this in such a powerful way because you have taken the launch of the book and the content that you put in the book, and you understand that that's the springboard to start the dialogue and the conversation. And now you're active with your members and your audience, because now that they trust you, they're following you. And the more you can share your story as you're creating it in real time, that's the transparency factor.
That's the problem too, is that a lot of people, I think, everybody's got a deal. We're in Shark Tank Nation. This is America. I think there's more people looking for money for their own companies than there are publicly traded companies on both the NYSE and NASDAQ by a multiple. And you're laughing because it's true.
Oh my gosh.
And, there's a lot of noise. So how do you need to go out there and say, look, I could be noise too, but if it wasn't for the book, I would be noise. And we probably wouldn't be successful in a lot of these deals where we've had tremendous success already on things I can't really talk about, but we've had one exit already last year in the first quarter. And
That's
then we're having a few others this year, and it's just going to be great. But it was the book and the foresight that we had when we put it together that allowed us to get to this point. And, people now with the book, they feel as though they're part of the story.
Absolutely.
Yeah.
And that means the world to me, because knowing how important cutting through the noise is, that is what I create at the very beginning, before we even started to write the book. It was like, who is the audience? What are their pains? What are their frustrations? But also, what are they hiding? What are they in denial? And if you can awaken someone from their denial, they will trust you, because they're like, wow, I've either never admitted to myself that I want this, or I've never heard someone else vocalize it and say it out loud. So you are giving them permission to follow what's already inside of them, but they've been hiding from themselves.
When people trust you with their money, they trust you with their soul. And a lot of people don't understand this. And this has been going on for years. And I use anecdotes of people who have inherited literally $400 million, and they're looking across the table at their wealth manager with a fading tribal tattoo under his shirt sleeve. And he's saying, does this guy really deserve to manage my money, Sal? And I said, oh, what does your gut tell you? Right? So, that's some of the stories I use, but everybody, that's just one of those points that sort of corroborates, as you were saying, the voice in the back of their head. Like, I'm thinking this, but, how do real people like me who have inherited this much wealth handle this situation?
Mm. And so you mentioned that you have had previous publishing experiences.
Yes.
And what were some of your frustrations that you ran into in the past?
It was interesting, and I'll tell you what it is. Anybody can write a book, and I spent a tremendous amount of money, not as much as you, but I spent a tremendous amount of money with a vanity publisher, right? And I just wanted to sort of like, at the time I was coming off my second fund, I had written a book on it's called Making the Yield, Hard Money Lending Uncovered, because people lost a lot of money lending. They didn't know what to do, so that was the de facto handbook. And then I wrote another one, too, talking about funds. But the problem is that it wasn't marketed. It was just something where you paid a chunk of money, and then all of a sudden you get all these UPS boxes full of your book, and it's up to you to sell it. And that, to me, drove me nuts. There are very few publishers out there who can market and have the media and the brand to be able to do this. And that is just part of continuing the story. After you write the book, there's no pillow talk anymore. Your publisher just walks away, right? I mean, it's just, they got their check. This is it. They don't know what they're doing, but they're working with, new authors. So, whatever it is that pays the bills, they're going to say, oh, you want to talk about accounting? Beautiful. Lay it out. Not anything different, right? But when you have the marketing and all of a sudden you get a text message from a guy you haven't heard from in 10 years saying that you were on CNBC.com, that sort of changes the landscape, and that adds to the prominence, the authority, the status that I have with investors, especially when it comes time to ask for a check.
Love that. And so what drew you to me and my approach specifically? What was it about my vision that I shared with you that made you want to partner with us?
It was interesting. I wanted to go, well, there were two reasons. Number one, I wanted to go with a female publisher, because I knew that after I had come to what I wanted to write about, that the majority of the readers would be women and female readers. They're the ones who are the nesters. They're not looking to flip, an NFT. They're not looking, to, share with you their Bitcoin trade of the day or anything else, trading meme stocks. So they're the ones who are sort of like the custodians of wealth, and that's exactly who I wrote it for. And I tell people that, and I said, look, and you've been at our LP events, with our family offices, and you see the quality of people there.
They're amazing.
So there's a lot of trust. They could have easily said, well, you publish it on Amazon yourself. How do you, female publisher, that doesn't really mean anything. The other thing too is that there was something that you said that was very important, and it resonates with me, and it's something that I probably don't attribute to you enough, and that is we were talking about personal branding, and in the era of influencers are the new investment bankers, right? And people don't really know what brand is. It means different things to different people, but you said your brand is your promise, and to me that was pretty interesting, and that's how we started to build the relationship around that. And then, a few other things happened. And then, sure enough, that August we signed up and, we were off to the races with it. But it was the marketing standpoint in that you were continuing to build the brand. There was going to be hand-holding after, I received all the books, right? And that really meant a lot to me because I've seen people publish books and give them to me, and it's not worth the paper it's written on. But, when you have something where you're continually carrying on the story from the book and building a personal brand around that to me was the most important because that builds, duration.
And was there any part of you that had like hesitation or concern because you had been through publishing before? I'm
a New Yorker and I'm cynical at best and paranoid at worst sometimes, right? So I'm like, all right, so is Andrea really going to help me with this? Like, is she really going to market it? And sure enough, you did. And I remember meeting you and the things that we did, you put together like a free download for me. I didn't even ask for it, but and that was like greasing the chute going into buying the book and then, being involved into the community that we have or the family office that we have. So that to me was, the cincher with that is that it was over and above. Everybody says over and above, but everything that you put together provided value immediately. And that's the best way that I could say that.
Thank you. That's such a wonderful way to say that because the book is the beginning, and unless you have that digital marketing component of capturing the audience, there are so many authors who say, oh, go buy my book at a bookstore, or go buy my book on Amazon, but they never are able to follow up with them.
No.
And so being the only publisher who also builds out the digital marketing component, that's a key part of it. And I said, you have to have this because this is what's going to make sure that you can first know who these people are who are buying your book. And then second, you will be able to build a relationship with them. Yeah.
I think too many first-time publishers think that they're going to be the next J.K. Rowling, right? And they're going to, they're like, well, I'm not going to make any money. Nobody's going to do this. But what you said exactly is what really had transpired. And, looking at the ROI on that, it was pretty immediate, not just from a financial standpoint, but the ROI was people were downloading it. I had a website. I didn't have to worry about doing that. There were a lot of pieces that you put together for us that made it effortless and removed a lot of the friction.
That's amazing to hear. You are reaping the rewards of having this strategy all put together because it's the publishing, it's the digital marketing, and then it's also the PR and media. So let's talk about that because what about the strategy really stood out to you as different or revolutionary?
I've never worked with a publisher or heard of a publisher that did PR and branding. It's that simple. It really is. But working with your team, just sending voice notes on ideas for articles and things, it was really convenient and it's very effortless to work with your team to be able to do that. But, it's, no other publisher is able to do that to provide the PR. And that's really what people are looking at. It's like, if I write a book, who's going to market it? Most people can't market themselves, more or less, a book that they wrote, right? So, what's going to happen next? What's going to be, and you were very thoughtful in the sort of list of services that you provided for this, where it was, this is how we're going to amplify you. This is how you're going to be a success.
Once we had the book published, we had the website built, then we started to get you press and PR and publicity. So can you share about what happened then?
There's too many press pieces to count, but as I said before, when your friends tell you and they post on your Facebook an article on CNBC that they all see and people who haven't talked to in 20 years, that's kind of a big deal.
Well, let's back up there because this is a great story. So
I woke up one Monday and my cell phone was just going off and they said, congratulations. And I'm, what's going on? And then finally I scroll through the text and I see it's one person in Texas who I'd done real estate deals with probably 15 years ago. And I haven't heard from him in probably 12. And he said, congratulations on the CNBC article. I'm like, what? Like, what? I didn't know what this was. Like, what's being released? And then finally, I was able to discover it. And that was actually something that really was very impressive because I don't know any other authors that have been able to do that, right? You got me into Forbes several times. You got me into Entrepreneur, right? And, you told me to get my own personal website, which is not what you do, but I just stockpile all of that there. And then, and you got me on a lot of high quality podcasts. You got me on things overseas, which was amazing. Like, it was really, really neat. And, that's part of the fun of it too, I think, is it sort of alleviates the stress of putting together a book, because I think people are embarrassed, like, well, who's going to read it anyway? My friends will just make fun of me for it. Well, if you're doing a press tour, it's kind of hard to make fun of someone, right? I mean, especially if they're on CNBC and then all of a sudden you look at them in a different light.
Well, and this is what was amazing about getting you out there, because, the camera loves you, the media loves you, and it was actually, I think, Yahoo Finance. We got you in Yahoo Finance, and then it got picked up by CNBC. So that's correct. Why we didn't even know that it was going to be picked up.
That makes sense now. Yeah. Again, too many publications to remember, but yes, that you're absolutely right about that.
But that goes to show how when you have a powerful message, the media is looking for you in order to find true thought icons, true thought leaders that are really evolving the conversation. And because your book positioned you to be this investor extraordinaire, they want to interview you. They want to pick your brain because they want good content as well.
Well, I mean, I think especially in the age of like AI, having a carbon-based form, that you can talk to and get real original thoughts from is far more important today. And I think that there's going to be a value on that. And if you look at a lot of the, financial advice, especially the mainstream media, it all sounds the same. They all, who knows who's writing it if they are, but it's just there really just to get the clicks, right? And I look at that kind of differently, saying, we got to evolve the conversation here. We got to go a different way. Maybe I'll say a few crazy things and see what happens. And then sure enough, I'm on Yahoo Finance.
I'm so glad you brought that up, because in this age of where AI and technology is taking over so much of the content creation, we are looking for the human element more than ever. And we want to know, who am I getting this advice from? Because if you're just going to AI, I mean, we all know that it's scouring the internet, and that means everything that's published and put up on the internet. But if we want the most cutting edge, the most transformative and disruptive ideas, we have to go to the disruptors.
Yes. Yeah, I agree. There's something about a book that I don't think we've ever discussed, but during the pandemic, which was interesting, I was watching the Michael Jackson interview, right, or the Michael Jackson story that said he did it. And after you watched that, I was convinced he did it. And then I watched another one that said he didn't do it. And after that, I was like, he didn't do it. He didn't do it. And then I was thinking to myself, what caused me to think this? And I was blindsided by the persuasion of what I call the documentary effect, which is what really we did with my book to be able to compel people to want to trust me and join the community.
Absolutely. Telling the story, capturing the audience, and giving compelling content that persuades people. And it's actually just as important to dissuade the people who you are not serving.
Correct. Yeah, absolutely. And so it's a documentary effect, because nobody's challenging you in a book, right? They're going to challenge you in a podcast. If you were on Joe Rogan, he'd be like, something else. But I think, for aspiring authors and people who are obviously entrepreneurs, you're doing yourself a disservice by not writing a book. I think everybody thinks that today is different. And I think everybody thinks they need to put together a pitch deck to talk to investors. If you're a life science CEO and you've had a lot of exits, talk about what drives you to do that, right? Talk about what you see and the successes you've had and why, this is, you're doing what you're doing. Then people are naturally going to want to follow you. And I think a lot of times today, people don't know the people who are operating behind the scenes. They bet on the horse, not the jockey. And that's where a lot of people, I think, lose out.
That's such an important point, because investors are looking to invest in the individual, in the entrepreneur. And so instead of just a pitch deck or a business plan, to actually have a book that an investor can read on a plane or in an afternoon. I mean, we're not talking about a big book here. No. We're like, it's 150 pages, it's actionable, it's engaging, and now they know who I'm investing in. Yeah.
The other thing, too, that I did at your urging was that I actually did the Audible myself. The first 2 books, I was like, I'm like, hey, you ever hear of voices.com? Just, go out and write a check for $1,000. And you said, no. This has to be done in your voice. And if you look at the ACX or the Amazon, Audible sales, they actually exceed the I give away the Audible copy, of course, but the sales actually exceed the paper book version.
Well, it's because of your sexy radio
Right.
voice, Sal. Well, will you tell this story of when I said, go into the studio, record the audible of your book, and will you tell the story of how you made video as well, and then they broadcast it?
Yeah, so I'm like, if I'm gonna do this, I'm gonna do it right. And this is the first time I ever narrated a book. And what I did was I went in the studio. It took me 2 weeks. I read the book from 0 to 140. And then I went back and read the first half again because, it was a little more warm, you're in the studio. But I put up a 2-camera shoot just so people could see this. And then I broke it down by chapters, and then I broke it down by like 5-minute blurbs. So anytime anyone, and I have it on YouTube, so anytime anyone says something, I'm like, you might want to watch this. This is for my book. By the way, here's the link to buy it. I'm not going to send it to you. I didn't say that, but.
Well, and then so I was like, put cameras on you so you get multiple media, mass media. So you're getting the audible recording of your book, plus you're making video content of you recording your book. And people love the behind the scenes. Mm-hmm. So whenever you went to the party.
Oh, so this is in Miami, you mean?
Yes.
So this is really funny. So we have people from Miami here. I'll just say it. So there's this place called 11. And 11 is like a glorified gentleman's club, but they have food and there's a lot of people there. And one of my friends, Mike, when I moved to Miami, he liked my book so much, and I'm like, look, I'm not going to 11. I want to go to bed. He's like, no, we're going to 11. And what he did, and I have photos of this, is that he put my book on the Jumbotron inside the strip club, and everybody said to me, you're an author. And I'm like, what? I'm like, how are people? And I look over, I'm like, oh my gosh. I'm like, you guys are funny. So that was quite a night.
It's of you reading your book.
Yes.
Yeah.
Yes.
It's you in the studio reading your book.
Oh, it was amazing. And people are like, you're an author. Oh my God. This is amazing. This is great. It's a fun time. It was, but I think like you need to have multimedia today. It's not just enough to have a book. And I think, one of the things that gives me anxiety is, am I doing enough media? Am I doing enough social media? I was on Twitter. Some guy read the article on CNBC, and a very popular guy on Twitter named Unusual Whales, re-quoted me, and there was a little discourse, with like 70 comments disputing what I was saying about people inheriting money are not good custodians of it. Whatever. It's an opinion point. But I think you get, I always like to have people, when I send them a book, to take a photo of it to send to me. That's media there, right?
Absolutely.
What do they think about it? I think when I'm ever like in Miami and I'm going into conferences, what I'll do is that I will, I'll just bring a few copies of my book and talk about like the things that resonate with me in the conference that I talk about in the book.
I've seen you posting on LinkedIn and all kinds of different social media, but I think LinkedIn, you are really a superstar.
Yeah, that's where my people are, right? Mm-hmm. That's where the audience is. They're not going to be on Facebook. They're not going to be on Twitter. They are on Twitter, but, everybody on Twitter, to me, Twitter's not really the professionalism. People don't really go to Twitter, I think, to find this type of...
You mean X?
Yeah, X, sorry. Sorry, Elon. People don't really go to X to really learn about things in depth, right? I think in LinkedIn, you have the followers, the people who are in the profession, and they're reporting from the trenches what they're doing. In their industries.
It's so great to see you on LinkedIn, and you're posting photos. You're at conferences, taking pictures with your book, taking pictures, autographing, and it's even gotten you on some stages.
Well, that's the other thing too that I'm glad you brought that up, because since moving to Miami, and when you hand out the book, guess what? People are going to search you out for podcasts, but mostly stages. And in Miami, anyone who's familiar between Art Basel and the end of May, which usually ends on Swim Week, Miami Swim Week, there are conferences galore. There are yacht parties galore. I was on a 100-foot yacht. You know what I brought? 5 copies of my book tucked away in an Apple bag that fits the size of an iPad, for those who want to know. I just tote around with it. And when I'm done with the bag, I throw it out. That is really what I use the book for, and I bring it out there. But it also gives me an incredible leverage for people to say, hey, this guy wrote a book. Why don't we talk? This is a family office conference. This is a venture conference. We're talking about this. We're talking about that. I actually have it got me. I don't know if you know this or not, but about 3 months ago, I was on a podcast called The Shrimp Tank. And the guy who manages it from Florida Atlantic University asked me to host Funding Fridays, which is sort of like a call-in show, and I'm the Simon Cowell, I'm the host. So people call in and they pitch these deals. And it's amazing. I would never have been able to get my own podcast at FAU if it wasn't for that book. And like there's been many speaking engagements that I can't even count, but like even the private party, bring a few copies of your book, come, we're gonna have a dinner of 8, come on over to the the Sunseeker 100 foot, there are a bunch of investors there, I want you to know. I'm like, here you go, this is great, and they love it because it's unexpected too, right? It's unexpected, but it's also something where it is. In the words of one family office, books are sacred. If you write, if you're an author, books are sacred, right? Because that is your life that you're laying out on the line. And I agree with that. But the speaking has been incredible, and I'm only getting more invitations now to be on podcasts, and I have a little mini studio in Miami that I use, and I can set up very quickly. Not like what you have, but just to basically talk and answer questions with people, and it's very interesting and. It really helps because, it's not so much the audience, it's the audience is the lever in this case. So if you have a lot of followers and you have a lot of shares and you're meeting new people, that's really what the asset is. The asset's the media, but the audience is the leverage, I feel as though.
So I love talking about how your book has really made you a celebrity in your industry, and people recognize you, and even before they meet you, you send them your book. Can you talk about the power of that strategy and why it's so powerful?
My ego overflows if you call me a celebrity. It's interesting. We onboard families, people who are investors, right? A family office today is $100 million or more, in net investable assets. Then you have the people who are NREs, meaning not rich enoughs, right?
Oh.
So they're like,
everybody
25,
else.
Yeah, everybody else, right? So, but we work with. But I think going back, I forgot where I was going with this. Can you ask it again?
Yeah. So it's
the celebrityness.
You're a celebrity. I mean, in the financial industry, there aren't many people who are in CNBC and Yahoo Finance and have their own book and get to speak on stages. So you've really risen to the top.
It is, because it's interesting, because when we onboard these investors, what we do is in the first line is, please send me your mailing address and I'll send you an autographed copy of my book. So now all of a sudden I'm giving them something and there's reciprocity. They're like, what? I thought I was just signing up for an email. No. We're onboarding you to our family office. You need to have a copy of the book. This is your handbook. Read it and then give a review. And then now this gives the conversation. Let's say, well, I haven't read it yet. Okay, that's fine. Or they'll say something like, I did read it. I could really resonate with this. I'm like, great, here's the link to Amazon. And you'll know this. There were a lot of people who, you were at this event, but for Art Basel in Miami, that's like when, that's like a huge carnival, right? And everybody comes in from all over the world. You have the continental Europeans, the Latin Americans, and mostly people from New York and Los Angeles who are coming to convene to meet under the auspices of art. And before they even meet me, you can tell by the look in their eyes that they're already impressed. Like, it's kind of weird to say, but it's sort of like, oh my gosh, this is a guy, like they already read your book. They know your story. They haven't met you in person.
It's and like, now you are really alive.
You're really alive.
Exist.
Yeah. This is great in the flesh,
I feel like I know you.
Exactly. And that really sort of cements the foundation of it. And I'm like, so what do you think about the book? I'm like, oh, you actually read that? Like, yeah, it's great. I am definitely a curator. Now I understand why I look at things different ways, or I'm definitely a documentarian, or, I'm the mogul, I'm first generation, I made a lot of money. And so he has still like an ego, that he wants to go into, higher profile deals and, get into like owning professional sports teams and things like that. So it's great because when people come to you, it's like they understand you only because you gave me the idea to put together the 5 different investor avatars. Because I told you, I remember this, I'm like, everybody thinks or they want to be Warren Buffett, but not every investor is the same. Not everybody looks like Warren Buffett. And that's exactly what sort of changed the dynamic of that, is I was able to assign labels to people that they could identify with.
Mm-hmm. And it opens the conversation. It allows them to self-identify where they are in your narrative storyline, and that also engages them faster because you don't have to keep having that surface level conversation.
Correct. Yeah. So I was able to target their identity. They're like, my number. And this is, that really follows along, but that also builds the relationship. And when you're doing things in private equity or real estate, you're talking to investors not for, just trading, any digital asset or maybe an NFT, for example, or meme stocks. You're building a relationship, and you really need to set the tone as if you're impressing these investors like you want to marry them. It's relationship building. And in a time, and we talked about this, where I think after, the pandemic, people became very transactional. People are like, hey, I got a deal, here it is, give me the money, answer quick, yes or no. There's no relationship there because these are long-term investments. They're illiquid investments. So you are married to these people. And a lot of people...
illiquid.
Yeah, they're illiquid. These are private direct. Think about many of these pre-IPO, way pre-IPO, Series A, not so much seed, but other things, where this is going to take a while for things to go through. And you need to be able to build a community. And if I'm bringing in investors and CEOs to do this, it's amazing because if they're talking in the same book, people see both versions of it and they can identify the needs, the wants, and the drivers behind each party.
Well, and because you can explain the full 360-degree perspective of the deal spectrum, that you are not just brokering, but like you said, facilitating the relationship, the long-term development. They have to know that they can trust you and that you're going to be in it with them.
Yeah. I mean, what better way to build trust than to give someone a copy of a book and say, well, I sort of wrote the book on this. I've been able to say that 2 times in my life, so that's great. But, as it relates to like the de facto authority for a lot of these families who have come into their own one way or another, and they don't know which way is up, and they have a lot of people who are poking at them, wanting things from them. This book sort of gives a good reprieve for them to be able to sit back and understand who the real players are versus the people who might not have the same alignment of interest with them.
And that is where the word authority comes from. It comes from the word author. Mm-hmm. So when you are the author of a subject, you are automatically seen as the authority.
Correct, and that's exactly what writing a book does. It's especially today, and in my business, there are people who are in different businesses, but if you're raising capital, you need to make sure that you have some way to distinguish you as being an authority, and I think a lot of people don't do that, and they're never able to raise money or have successful funds because they are not always raising capital. They don't have a tool to help them always raise capital to invite people into their community or into their church, right? So, they buy the book, they're on my email because you put together a great site and all of this. Now they understand how, we behave, and should they want to stay, not opt out, we continue the story from there.
Are there any specific milestones or opportunities that you could mention as a direct result from publishing the book?
Yeah, so we've been invited to invest into opportunities most people would not be able to invest into. Stripe, SpaceX, things like that, where it's very competitive, and if you don't know who you're working with, you can lose your shirt. And it was because of the book, and it was because of the promise, which is what we always executed, we were able to get involved in these deals. But one thing, and I can't mention the name, but when I first moved to Miami, I had met this quirky guy, and nice guy, very smart, from Chicago, and he took a liking to Albert and myself. And he read the book and he liked it, and we were working on a deal together. He was able to bring in a name brand lead investor into one of our companies for over $1 million. And at that point, I texted my partner, Albert, and I said, I think we won the Venture Olympics. And he goes, I think we did too, which is amazing. So, things that can't easily be disseminated, publicly like this, people who do belong to the Church of Sal, through Brahmin Partners, they will see who that is, right? That's, and all the successes, because that, to me, is the way that you formalize, relationships, as being not only trusting, people trusting you to do what you say you're going to do, but the ancillary of, that book might have gotten into hands that I never thought it would get into.
Mm-hmm. And this is so powerful because when people ask me, well, how much money can I make from my book? I always ask them, well, how much money do you want to make? Because this is a perfect example of how one book in the hands of the right investor brought in $1 million.
Yeah.
One book, $1 million. You've raised $50 million and counting so far. Mm-hmm. And it's all because of how you understand the book as leverage, opportunity, and opening a relationship.
It's a fulcrum.
Ooh, that's a great word.
It's a fulcrum. To me, and I say this to people, The fastest way to legitimacy are two ways. Number one, owning part of a professional sports team. That's one. And number two is authoring your own book. And again, I literally, flew in to Miami, and I made so many relationships. I don't tell you this, but in Palm Beach soon, I have a book signing at the Breakers.
Ooh, I love the Breakers.
That a major investment bank is sponsoring.
Amazing.
At the seafood bar.
You've been holding out on me.
Well, it's still in the works, but still, people read the book, they give it to the clients, it's a gift to the I never thought that these major investment banks would be giving my book out to their private wealth clients.
Whoa. Okay, hold on. Let's back up here for a second. So
let's put this donkey back in the barn, okay?
So there's a private wealth investing fund.
Well, no, let's just say it's anyone. Let's just say the name Morgan's in it. We don't know which one, okay?
Got it. And they want to give your book away to their private wealth clients.
Correct.
Amazing.
Isn't
Congratulations.
Thank you. Yes.
It just keeps getting better and better, Sal.
Yeah. No, it's great. And, to be able to sit there and, talk to people and hey, what do you do? Oh, this is great. I love the book. This is amazing. Oh, thank you. Being able to just catch contacts, who are meaningful at that point, it doesn't get much better. It's sort of like shooting, fish in a barrel.
Or in this case, bringing in multiple millions of dollars of investing.
Yeah, or relationships that will.
Yes.
Yeah, it doesn't happen immediately. There's a incubation period where they go through our emails and everything, and they get to see who we are, and then by the time, the time is right, they strike. So we try to give as much value as possible before we do anything like that, before we, do the ask. So there's an ascension, and, I want to talk to you. And, exactly, if I give you a copy of the book, the next thing I want is hey, great, what do you like about it? Well, let's, I hate saying the word jump on a call, but let's meet for a Zoom. I'll have my EA, Roxanne, set something up for us mutually convenient. And, that's sort of, you can pull out exactly what they're looking for. Every investor has their different idiosyncrasies, and it allows me to sort of, manage that relationship carefully because I spent the time talking to that investor rather than just shoving a deck in their face.
It's so powerful. And I have been so honored to be a part of your journey for years now. Mm-hmm. And so I've been able to be a part of watching the evolution of your brand and your impact. And it was a real honor to come to your limited partner dinner in Miami.
Oh, that was fun.
And can you share what you said when you stood at the front of the room?
Can you remind me?
Yes. You said, you are all here because of Andrea.
Yeah. Albright. Oh, yeah. Oh, yes. Okay. And I have video of that. Yes, that's true. No, it's one of the things is that everybody was in that room. I would say probably about 70% of them were there because of you. And that's what I said. And it wasn't because you called them or you knew them. It was because you gave me the confidence, the insight, or the foresight, rather, to be able to write something that would resonate with these people, that they want to invest with us. And that is exactly what it is. And I remember I was giving out copies. Yeah,
yes.
It was great. But that is really what the most important part of it is. And that whole, every relationship I have in Miami is basically wrapped around that book.
So what surprised you the most about the journey of writing and publishing this book together?
You were very, very, very hands-on, and I really appreciated that. A lot of times, service providers, people will say, I'll take care of you, you get the check, and then they never, you don't get the white glove treatment that was promised. But you actually coached me through everything that needed to be done. And we met several times. Remember, you were in Vegas for a conference, and we met, and we went over that, and you showed me the 10 mistakes every family makes, and you wrote that for me and put it together. That really is what the most important part of it is that I know that you don't work with everyone. You're not a mass market publisher because it takes a lot of effort for you to do this, even with a team who I like working with. But more so, you've allowed me to sort of think beyond the boundaries of my ego, if that makes sense, because certain things, some people wouldn't say, but you made it comfortable for me to do that, to interview a Rockefeller, to interview my partner, to interview people, people who I worked with at Goldman Sachs, for example, or other deals or families we've managed money for, by inviting them into the dialogue. And that is something I never thought of doing if it wasn't for you. And I don't think you understand how impactful that is, right? Because that's really if you think about it with the documentary effect, if I say something crazy, then you're being corroborated by a Rockefeller or a big family or someone else. it legitimizes, the statement. And that's, really, I owe that idea to you, because I don't think any other publisher would have, been able to do that. And of course, those people who like to self-publish, they're never thinking about it either, because they're thinking within the boundaries of their own ego, correct? And they want to sound right, and they want to sound like, a special author, and they want to sound authoritative. But what the problem is that they lose the concentration or the focus or the respect of their reader, because it looks like it was boilerplated and put together.
Well, it is such an honor to create with you and see the impact that the book is having. And if we can touch on a personal matter.
Oh, boy.
Well, I think it was very special that we were writing it during the passing of your mother.
Yeah.
What is her name?
Kathleen.
Kathleen.
Yeah. Mm-hmm.
And I feel Kathleen's presence with us through the writing of it, and even now, all this powerful impact, and that it is about legacy.
Thank you. I do appreciate it. But yeah, for writing about legacy, you have to understand that I've lost my entire family, right? And so, there's a lot of, there's a lot to be learned there. Not that I talk about it, but it's also, I've always used pain to be a driver to do something new. I pivoted into venture, 12 years ago after my brother passed away, right? So, I needed to throw myself into something deep. But at this point, when we were building the family office out, and we had a lot of investors, but they were not being focused on us. They were being sort of, pulled away by shiny objects. It was the book that brought them together.
I think that's such a powerful part of your story, because there are so many people out there who are going through difficult times and who have many excuses or reasons for why they are not fulfilling their biggest dreams or their potential. And you have embraced this lot that you've been given, and you are now impacting other legacies as well. And so I just admire you so much. You
look at it from one standpoint. I just recalled something. There was this very gruff investor. We haven't done anything with him yet, but he sold a company and for about $60 million, and he was looking to get into these real estate limited partnerships. And he was asking me, like, I want to invest in this. What do you think? And I said, well, why don't you read the book and come back to me? Because I write some rules, about things that, we follow for success. And I spoke to him about 2 months later, and I said, hey, you're going to write that book review? He's like, of course. And I said, did you ever invest in that, deal in New York? And he said, no. He's like, I asked the 3 questions you asked me, and the guy couldn't, answer them. And he said he walked away. And I said, well, that's funny. How much were you going to invest in this deal? $2 million.
Wow.
Yeah. And looking back now, if he invested in that deal, it would have gone up in smoke.
So not only are you protecting and preserving people's families' wealth and their legacy, you are also helping them to prevent or making horrible mistakes with it.
Yeah, there's rules that you follow, and I set out the guidelines, which are easy to follow. I think, especially in the financial services industry, a lot of people like to use a lot of technical jargon that they don't even know themselves, like adjusted risk. Well, adjusted to what, right? I mean, if people, if they can't understand that or they can't communicate that, then you know that they probably don't have the depth that they want you to think that they have. But when you put the guardrails for people and they understand 3 rules before you invest in any real estate limited partnership, and if you violate these, you're going to be in some risk. That's something that people take away immediately, and that's sort of like a soundbite that they'll never forget.
And this is exactly what being a thought icon is all about, where your thoughts, your ideas are able to transfer to your audience and to other individuals that changes their life. So let's talk about some of the things that you say. And you mentioned that you talk about a private club mindset for investing.
Yeah.
What do you mean by that?
I think, as I said before, since the pandemic, we've been, I think, involved in a loneliness epidemic. And I think people want to have a sense of belonging to something. It's part of our human nature. And what we have seen, and you're seeing it now, is the rise of membership clubs. And the same thing's happening with families, because they want people who are aligned with themselves in every way you can think of, politically, financially, what have you. And we've been able to do that very successfully, and we're based out of Miami, so people descend, we all meet, we all greet, we bring people in, other families, and it's the networking that really, really helps. And that's part of the thesis that we have as part of the interactivity is we want people to be involved to do this, and we built a community to do that where people, who are, if qualified, of course, not, we're not Ellis Island, right? But if these are people who, after we talk to them and get to know them, and
did you just say we're not Ellis Island?
Yeah, some of these guys.
That was just like a throwaway comment. It's very funny.
But you know what I mean, right?
You don't just let anybody in.
Yeah, you don't want to let anybody in. And you and I both know of clubs that they let anybody in, and it just polluted the pool entirely.
Yes.
And
drives out the quality members.
Well, it also creates it creates distrust, but it also disincentivizes people and discourages people, because it's like, all right, this guy was able to put together a few couch coins to be able to join this membership, but he's not adding any value to the club. And the one thing, especially when you're working with established families versus newer emerging families who have just created wealth and had an exit, is that they're looking for leadership to see what the bigger boys and girls are doing that they're not. And that allows people to see, in a very intimate view, what these large billion-dollar families are investing into, what their mentality is, and maybe they should be following along with them.
And it's the power of just proximity to being able to hear and to see and to witness how this billion-dollar mindset processes their investment.
Yeah, it is, and to them, it's leadership, right? But they're leading with the check, right? They're not proselytizing. It's like, this is what we've invested into. For example, there's a very prominent family I won't mention, but one of the things they're doing are roll-ups in the southeastern United States of grease trap businesses. Grease trap businesses, because they're looking out 40 years. There's always going to be grease.
Oh.
You see what I mean? So there's always going to be a service for that. AI is not going to take away grease, and as long as there's humans, they're going to be eating and producing food that that necessitates this. I mean, we become a takeout generation, right? So if you think about it, it's smart. But if you look at the play on it, it's very stable. It is not very glamorous. But it produces steady Eddie revenues that they like to provide for the next 40 years.
And how does this differ from traditional old-fashioned investing?
I think traditional old-fashioned investing, are people who are investing in the stock market and mutual funds, and they're paying for someone else to buy financial services. And this is different because people who create wealth want to make sure that they can preserve it because they're wealth creators. The stock market are for people, unfortunately, who are not wealth creators. So they have a different needs and different drivers for doing what they do. And that's why they gravitate more towards like what we call the retail investing base of following, Warren Buffett, and all those guys into these folksy, into these, stocks and just staying long term. But they don't necessarily understand or see that Warren also is, the greatest salesperson there is out there when it comes to U.S. stocks.
In your book, Investing Legacy, you talk about how the ultra wealthy think about investing across generations. Can you point out a strategy that the ultra wealthy use and maybe the average investor misses?
Yeah, I think the average investor, and this is a difference between wealthy people and people who are average, is that the average investor, and I can see this a mile away, they're not rich yet. They're still trying to accumulate wealth. Does that make sense? So they're going to take risk, and they're going to be looking at things that are not as maybe steady Eddie or stabilized. They would be going into other things because they still want to create more wealth. And so they have that chicken little syndrome, if that makes sense, compared to their brethren. And the way the book puts it together is that you're able to see the difference between a guy who's worth $50 million versus a guy who's worth, manages for his family over $1 billion. There's a big difference in the economy there as it relates to the drivers behind that. And, we see this all the time. People, they're always, people are taking like a lot of risk back in the day, buying NFTs with their retirement accounts, going all in and losing it. It's just, that's not what wealthy people do because they have operating businesses that throw off a lot of cash that they need to put into things.
So it's a mindset of instead of taking a big risk and like almost gambling, hoping that this is going to be the big payoff. They know that they have solid financial investments that are going to appreciate over time.
Let me give a technical example if this is
perfect.
Okay. All right. So we love Class A industrial. Our families love it. If you look at some of the biggest families, the owner of Zara, Amancio Ortega, he loves Class A industrial. This is something people laughed at me for. And the difference that I can tell right off the bat if somebody's wealthy or not is when they come back to me and they challenge me on the return. Now, when you have steady Eddie tenants, and I use this like Milwaukee Air or Milwaukee Tool or Carrier Air, who are paying rent, that's what we call a credit tenant, okay? They're richer than you are, which is great because you go to bed at night and you pull the covers over your head knowing that they're going to probably pay the rent. Even if there is, a nuclear war, people are going to need air conditioning and tools. What the middle class or the upper middle class do is that they're gravitating more towards things that are what we call value-added real estate. And this is usually in multifamily. And they invest in people who have never done this before, and they think that real estate is the asset. And I can tell you that at the time we were offering maybe a 7%, which was amazing. And we've exceeded that by far on a return on that, on a cap rate return. These guys were offering a 15% return. But what they didn't understand is that there's an operator behind it who has to wake up in the morning and put value together. And that's a whole difference because a lot of good things need to happen before you get a check. And there's a lot more risk that you're going to be taking with that. So that's the difference because people look and they read risk like sort of like a wine list, right? You're going out, you're trying to impress someone, you don't know anything about wine, but you go across and down to the bottom, the most expensive one. That's what these guys do, and they pick an investment. And they're like, well, this guy over here in Cincinnati, Ohio is going to give me an 18. Well, good luck with that. We're first-time operator, someone who's never done this before. He lives 2 time zones away. Good for you. You see what happens. But these are real-life scenarios that happen every day that I'm on the front lines with talking to people, not just about my deals, but about the deals that they're going through. Because a lot of times, as I told you before at the beginning of this episode, that when you manage a lot of money for people, you become their consigliere. They confide in you certain things that they would never confide in anyone else.
What's the number one mistake you see entrepreneurs making when they first start making real money?
They think, again, it's the ego. So, and I wrote about this in my book, and I actually interviewed Fred Nasm, who has 69 exits under his belt.
Wow.
And one of the things he said as I was interviewing him from his Madison Avenue townhome was, he said a lot of these guys, and this is something I wanted him to corroborate, is that just because you make a lot of money in one industry doesn't necessarily mean that that's going to be successful or translate or, the word I'm looking for, it doesn't really cross-pollinate into other things. So if you made a lot of money, for example, in life sciences and you think real estate is easy because it's just a box and a roof, that's where people lose a lot of wealth because they think that they know a little more than they do because they have a tremendous amount of success that they've had with some exits, but really they're tyros when it comes to investing their own money.
So how should entrepreneurs restructure their capital allocation once they make, say, $10 million in net wealth?
Without saying the obvious, they should buy my book and read it, or they can email me for a free copy of it.
Of course.
I think what they need to do is they need to, and a lot of people don't put a priority on this, but they need to network. They need to start networking immediately with people who are richer and more successful than they are. And again, that's where the membership clubs come in. And, it's the same thing with investment clubs. It might not be as pretty as where we are today, but these are people who meet informally. I remember on the Upper East Side at, Greasy Spoon, the Green Egg Diner, on I think it was on Madison Avenue or something. So there's informal, there's a lot of formal, but also informal. The more formal I would suggest you do is you probably want to write a check to go to some of these conferences, and you really want to hang out with the right people. You and I met, we threw a party, remember when we first, after the Michael Milken event, right? Yes. The Milken Institute. Real people there, $25,000 ticket, right? Not to mention, all the food and everything that we had to provide for some of the people there. But we were at that conference and we paid to be there to be able to meet people, to increase the stamina and the strength of my network should anything happen as it relates to some unexpected deals that I never thought I would be able to get into. I would need to be able to have the right person to go to. I think people look at it as saying, well, I don't want to fly to LA, I don't want to fly to New York, I don't want to go to Miami. You're doing yourself a disservice, right? And that's really what it is because you need to start talking to people who speak your language. I think the guy who comes into $10 million, he'll go to the cheapest event he can get to. He's with a bunch of service providers or people who are first-time founders, for example, asking for money, and they get totally discouraged because this isn't exactly what they thought it was. And my rule is the higher the barrier to entry to go anywhere, the sweeter the air and the better the network.
That is really powerful. And I would absolutely second that because investing back into my business, into my brand, there would be times where I would be like, oh, I don't know how I'm going to make my payroll or keep the lights open, but there's an event and I'm going to go put the money that I have left over and go to this event. And I would end up getting 3 new clients, 3 new deals.
Like when you came to Miami.
Yes, absolutely. And that's where people need to understand it is the investment of your time and your energy. And when you meet someone face to face, now they know you and trust you.
Correct. Yeah. I mean, that's just the way it is. But again, it comes back to the point is don't be afraid to pay for it, right? I mean, people are going to spend maybe $10,000 in some sort of discretionary product that they don't need. Why not just spend that to go to a nice conference to meet with people, maybe, have someone take you under their wing, and then you're able to really see how, this rarefied strata actually operates and invests.
And what do most people misunderstand about long-term wealth creation versus just a flashy ROI?
Again, if you only have $20 million, you're looking for a flashy ROI. If you have over $100 million, you're not looking for a flashy ROI. You're looking to expand your network. You're looking to get into deals that you never thought you would be able to get into. Capital is a commodity today, Andrea. Everybody's got it, especially since the pandemic. But the point is, do you really want the right people to be involved with you, or do you really want to be in the same club of people that don't share the same values you do?
That is really powerful. And even though capital is a commodity, capital is also energy. And so where you get that capital from is going to influence and impact your day-to-day life.
Oh, absolutely. I mean, I can't tell you how many newfound operators who call me and they're like, yeah, I got this investor, he's a nightmare. I'm like, well, why did you take him, right?
Yes.
I mean, you're not making any money from him. You married him, and now he's looking for a way for me to replace the investor. But it's true. You got to think about this person when you talk to them. Is you're courting them for marriage. That's really what it is. You're courting them, and there's no difference between raising capital than romancing someone, all right? And I think, to be blunt, especially a lot of founders who I meet, they approach families like ATM machines. And it's even worse than that because...
And you mean family offices.
Family offices, right? So they show up and all of a sudden... I call them deck pics, right? So somebody's like, hey, I just met you on a cruise or something in Miami, and he sends me an inappropriate deck pic, which is a 20 megabyte PDF that he texted to me on iMessage saying, hey, bro, we're doing a Series A. I mean, do you really think I have the time to read 37 pages of something from a guy that I know has spelling errors and everything all over it, and he doesn't look like he passed high school math? That's really what it comes down to, is that, everybody's asking for something, but nobody wants to put together the relationship first. And it's like dating, it's like anything else. And I tell the staff this, it's the people who are on the call, what happens when you're dating and you grab the butt too fast? You get smacked, right? That's exactly what happens. So you got to be very careful and sort of, add the romance. Romance to it, right? These guys are all grabbing ass, the first time they see me. I'm like, whoa, easy. Like, hey, the thing with the iPhones where you can just like put together and I'm like, whoa. I'm like, I don't know this guy. He's going to be on my phone now. I'm like, hey. And now he's just sending me all sorts of crap. I don't want that because time is very, very... time is, it's very precious. We don't know how much of it is, but I always want to make sure that I'm working on the right things. And again, those are rules that I talk about in the book that people can easily understand.
And it is all about that long-term investing strategy. Investing in capital is really the same mindset of investing in people.
Yeah, of course. I'll leave with this. It's like, when you're taking capital from someone, I've seen too many people do this. It's just because it's there doesn't necessarily mean you have to take it, right? Like, I'd rather lose my own capital than, say, if I had a mother-in-law and lose her money, because which is more painful? Absolutely. Your mother-in-law's money, right?
Yes.
She's never going to let you live it down, never.
So what books or mentors have shaped your philosophy around capital and success?
One of my favorite books was written in 1983 by David Ogilvy, and it's Ogilvy on advertising.
Ooh, I love that book.
It is world class. It's a business book.
Yes.
It's not just a marketing book, it's a business book. And one thing that that I read, there are a bunch of tidbits, but he said every institution is the lengthened shadow of one man.
Ooh.
And that's
or woman.
Yeah, or woman. Yeah, or woman. Hold on. But or again, 82. It was different.
Yes,
right?
yeah, different type. Big shoulder pads.
They're big, different. There's Reagan. Things are still a little different. But it's really interesting how he talked about that. And some of the tidbits that come from that is also when I'm communicating to people, and the reason the book really helped me is because I could communicate in a way where families could understand me without thinking that I was going to quant-splain them with facts and figures, IRRs, and all this kind of stuff. And that really worked out really, really well. Because before that, institutions are into that type of stuff. But families, they don't know any different. And that allowing me to connect with them on a basis where they have a story where I could relate to them in very simple understanding is that, again, what Ogilvy wrote in 82 is that the investor's not stupid, she's your spouse. And if you can explain it to your spouse, then it's going to be much easier for these people to get their head around it and really feel motivated to work with you.
That's powerful. That's a great book. I'm glad you reminded me of that because I remember the advertising and how simple they were and how powerful. And it's all about the copy.
Yes. Yeah.
And grabbing the audience.
Which you're good at.
Well,
which you're really, really good at. One of the, for my book, it's, I tell people, like, why'd you write it? And I'm like, what do you want your kids or grandkids to think of you after you pass? And then after that, they're like, now they have the story in their head, right? Now they can't stop thinking about it. And they go home and they're like, oh, yeah, it was great. You're like, that was really interesting. Can you send me a copy of the book? I'm like, sure.
You got to cut through the noise.
Yeah.
In the world where everybody is playing the vanilla game, you got to go straight for the highest level conversation.
And people gravitate towards that, especially very wealthy families. I mean, they all have smart people, on their team vetting investments, but you really got to, you really need to communicate in a way that they can feel as though that they're very, very compelled to work with you, but also proud to work with you. And that can go into a different conversation right there.
In what way?
Well, I think, working with investors, and one thing that the book taught a lot of prospective, investors and current investors is that there's really one thing that drives someone to write a check. And that is, is it going to elevate my status? Is it going to elevate my identity? Because think about it for a moment. You always want to be known as the girl that people say behind your back, I know Andrea, she owns the Packers. That's what people want. It's an elevation of status that these investors are really looking for. We've done this before. We've given away jerseys for Chelsea United, autographed by the entire team to incentivize people to, invest in something where we had a short window to invest into. Mice go where elephants can't. But if you elevate the status, and that's exactly what the book does, is it sort of gives a little nudge to the elevation of the status or FOMO of smaller people who are not at that level yet to be able to want to be able to punch above their weight.
Mm-hmm. And you're giving them a window into what's possible.
Correct. Yeah.
Yes.
And they're like, this is great. Everybody wants to be known as the guy that owns this or that, or, I can't tell you how many conferences I go to and they say, I know this guy, he owns the Patriots or whatever, or part of it. You don't know if it's a lot or a little, but that's the first thing you learn about people.
Well, I learned this from publishing your book with you, and I still have statementassets.com waiting for you and for your next book.
We will do that. It's going to be, I promise you we will do that, because of the successes we've had have been manifold in ways that I never thought about it. Again, going back to it, I'm on podcasts, I'm speaking on stages. I'm not only speaking on stages, I'm like moderating University of Miami, technology conferences. It's really, really interesting because that is something that it's the glue that causes the relationship and, for lack of a better word, the intimacy you have with your reader.
Who is one historical figure or financial philosopher that has shaped your framework around money and power?
Very interesting. There's a book that was given to me by one of my families, and it's called The Merchant Bankers. And it was written by Joel Weschberg. In 1962. It's available now. I think it's been reprinted. And it talks about the responsibility someone has when asking someone to part with their savings to invest into something. And he talked about how the merchant bankers in London invented venture capital as we know it today across the Atlantic. It talks about the power and wealth that these people wielded, but also in a way that was very non-conspicuous. And that if you look at the entire financial industry today, there's a lot of people who are, maybe a minority of them, are behind the scenes and really pulling the strings on a lot of things. And that just taught me very carefully, the awesome responsibility it is to get someone to part with their wealth, which is the highest form of sales going back to Solomon.
Wow.
It was written in 1962. So I don't, I don't know if he, uses the, There's, it is a great book to read, and anyone who's looking to be a steward of capital should read that first and foremost. It's not so much on the investing, but it's on the awesome risks that these early families, these early merchants took, going all the way back to forming the, country of Italy today from the, the fragmented states that were there to unseating kings and doing all sorts of things that still sort of happen today, but a lot of people don't realize it. But it also, it gives sort of like for me, it's sort of the conduct book for someone if they're working with money, the awesome responsibility you have. And I think new managers and new people, new operators who are looking to raise money, they don't understand that. They think of capital as a commodity or an afterthought, but really what they don't understand is that there's a huge connection behind that.
That's really powerful. And I was very influenced by the history of money, and it talks about how money as currency was just about trading goods, and it was the merchants who were the ones who were dealing with all the different currencies, and that's why we have so many words in our language that were from Italy, like banco is bank, and all because it was the merchants who were the ones who were using the currency in order to exchange goods.
I mean, think about like some of the most famous investment banks. Goldman Sachs sold window panes during the Civil War and used all that. Lehman Brothers sold cotton during the Civil War. These are, they're diamond merchants in Europe who came over, many storied families, and they just basically took the wealth and created what's called an investment bank or a glorified family office. To manage that wealth, and they found out later that they made a lot more money investing that wealth than they did in their operating companies.
And let's flash forward to today, because you are investing in some really incredible entrepreneurial ventures. Can you share?
Yeah, so it's interesting. We have two rules before we invest into anything. Number one, no first-time founders, right? We're not tuition. There's a lot of ego. There's a lot of inexperience that goes with that. And that's 99% of the deal flow you see today. And number two, I want them led by an in-kind family. So if it's a family office that's a life science family that made a lot of money in life science, I want to see them lead an investment in life science. And we had a lot of success with that. So when we look at that, that's sort of the table stakes before we get into anything. And what follows is now you have just basically the cream. And that is where you start to see a lot of the action, because you have pedigreed operators with well-capitalized families who are patient behind them. And we've invested in deals, some name brand ones, some ones that aren't name brand, but one of our companies was one of the first AI companies that we invested into 3 years ago. And we haven't done an AI company since, but since then, that one company has received they received a $50 million investment from a very, very large sovereign wealth fund overseas. And we are very ecstatic about that, because if we didn't stick to our principles with that, we would never have been able to get into that. And that'll be in the next version of the book that I'm putting together, is that success story after it closes. So, there's a lot of excitement there, but nobody knows the difference between your deals and anybody else's deals if you don't document it in your book, right?
That's right. And so can you talk about SpaceX?
Yeah, same thing with when you bring in, again, it's all relational. It's people who can trust you. And the first thing is the book starts that, and then it goes forward. And then people buy that book for other people. They say, you should read this or you should do that. And at some point, people work with you, and they like it. And they said, hey, we're going to be going into certain things that most people would not be able to get into, only because of certain technical reasons with, certain investors being allowed to come in, especially to like these, name brand but profitable companies, but they're private, like SpaceX and Stripe. And it's because of the book, and it's because of the relationships, and it's because we were good Boy Scouts with this one AI company and another company that we were invited to get into this. It's a whole domino effect. We've invested 5 times into SpaceX, 2 times into Stripe, probably another one at some point, and then some other higher profile deals that I'm not at liberty to talk about. But we'll also be going into Class A industrial real estate, which is alongside one of the most storied families, who I gave a copy of my book to, one of the wealthiest, actually the wealthiest real estate family in the nation, in America.
So exciting. And can you share how you got into Stripe and how you found out about Stripe?
Just a phone call with my partner Albert and myself.
But it wasn't it the creation of your book funnel that you were like, oh, what is this thing called Stripe?
Oh, yeah. Well, I didn't know what Stripe was before you. I had no idea.
That's what I was looking for,
It's the biggest company you never heard of, right? You never heard of it. And I'm like, Stripe. I'm like, and you set it up for me, and, I was able to send it out. And,
it's part of your digital marketing funnel.
Yeah, it is.
So being like on the cutting edge of internet marketing, I had tested all of the different payment processors. And I'm like, this is the best one. And this is what we're going to create on your funnel for your book.
And now we have a large investment in it. Yeah. I mean, amazing. Think about it. Yeah. I mean, I didn't know anything about Stripe before you. And you're like, you need to start a Stripe account. I'm like, what? Like, what is it? And then sure enough, everything has changed. But those are high growth companies that you only get invited into because there's a lot of people out there who want to get into these deals, but they don't have the money to do it. And there's a lot of people who are wannabes and, also rans who can't really function. They want to get into it, but they can't do anything. And because we have a reputation for execution fast, we were able to get into these opportunities that most people aren't able to get into. And nobody's going to ask you to invest into a deal where they have their credibility on the line if you can't do your part. And one of the things that on a testimonial that's in the book is a former Goldman partner, and he said, what's the definition of partnership? And he said, that was a question I asked. He said, you never want to let your partner down. And when you think about business like that from that standpoint, you understand why a lot of these families and partnerships have lasted forever, because it's the culture. It's the culture itself. And that's what we have, is a culture of being able to execute. If we can't execute, I'm not going to go near it. I'm just not. To be honest with you, I tell a lot of people that show me deals that our deal book is full for the end of the year. And it really is, because we're going into these higher, we don't have to worry about the deal flow. The book and everything since then has made it so that we get what we want. Does that make sense? Without having to go out and fish for it. It comes to us because we're I guess you can say, a trusted counterparty or investor.
Well, you've become the buyer, not the seller.
Correct.
So they're all pitching you to be a part of what you are creating.
And that's what we call the buy side part of the industry.
Yes.
Very good.
So
Look
powerful.
at big circle. I love that. Came right through. Right.
How do you plan to leverage your book as part of your long-term strategy?
It's always going to be there. It's always going to be. It's always going to be. How do I say? It's always going to be the Bible. For me, if we start a relationship, I'm proselytizing to you, I'm going to give you a copy of my book. And that's so that we're speaking the same language should we talk again. And so that's always going to be the foundation, or the cornerstone for everything that we do. Going forward, we've discussed this before, I'd like to relaunch another podcast. I've already been asked to do, as I said before, Funding Fridays, once a month in Boca Raton, close to where I live at FAU. It's a call-in show, but I want to do my own show as we continue to build out what comes next. Where's the sequel? What happens after this? Is that all there is? It's either a podcast or a newsletter, and we're figuring that out right now.
You said to me once that the book was the most powerful marketing tool that you've ever had. Do you still believe that?
Absolutely. I go to conferences, again, with 2 Apple bags, sometimes 1, 2, with a Sharpie. Each one holds 5 books comfortably, and the iPad, the one that you buy an iPad, I'm like, this is great. So I go to the store near me in Miami, in Brickell, and I'm like, hey, can I have a few bags? And you're like, sure. And so I just go out to any conference or anything. I'm like, hey, I don't want to come empty-handed. I'll come with a bottle of champagne and the books, and then all of a sudden I got people's attention. It's like, ooh, I want a copy of that. Because everybody wants something, right? That's why Amazon's successful, is because everybody loves the dopamine of receiving something in the mail or getting something for free, right? And that's just what I don't want to leave empty-handed. I'm like, I'm sorry, you weren't here. You can, give me your card.
Oh, and then you run out.
Yeah, and then I run out. I'm like, I'm sorry. Yeah, scarcity. Now, I'm not going to bring a lot because I don't know who's going to be there, but I always, qualify the room. But I was a part of some event during eMerge, and I probably autographed about 10 books, and I should have had probably 30. Mm-hmm. And that's fine. That's it. But I also saw a spike in sales on Amazon. Not that I want to sell on Amazon. It's just there to be able for the credibility, for the reviews, and what other people have gotten out of it.
Well, it's amazing to be a part of your journey and everything we've been co-creating.
Yes.
And I love that definition you shared about partnership, is not letting the other partner down.
Correct.
And I absolutely feel that about you. Little pinky swear.
Thank
Here
you.
we go.
Thank you, Andrea. That's amazing.
Know.
No, but there's been a lot that's been accomplished, but it's also, has distinguished us in a very noisy industry today. As I said, capital's a commodity. There's all sorts of noise. Everybody's always asking for money. People don't know which way is up. This is de facto handbook to answer a lot of those questions.
And if someone was considering partnering with me, partnering with Beverly Hills Publishing, what would you say to them?
I would say it's, and I learned this the expensive way by having two publishers, having a publisher, a vanity publisher before you. I think if you're really serious about anything as far as entrepreneurship, building a culture, raising capital, you need to go with Andrea. I speak and I can attest from the experiences that I've had, that there's people who I've never met, and I'm not saying this happens all the time, where you meet them on a Zoom call, they have that automatic trust, and then all of a sudden, they're wiring like $250,000 to you, right, for an investment in something because they trust you. Now, we carry that trust because we have the interactivity, and because of working with you, it's how that interactivity got ingrained in my head, because a lot of people treat investors like old high school friends. It's like, oh yeah, if somebody gives you a chunk of their wealth, you need to be talking to them, and you got to treat them like a partner, as I said before, even like a spouse, in the most extreme sense. And that to me has changed a lot, because I was able to eliminate a lot of the noise, basically suck the oxygen out of the room wherever I go. And then before you know it, I get emails to be like, do you want to be on this podcast? Do you want to speak at this event? Will you come to Boca Raton to speak here? Will you go to, Palm Beach? I mean, I've been to Palm Beach more times than a commuter in New York. I mean, it just oscillate between there and Palm Beach, talking to people so much that this, investment bank wants to host a book signing for me.
So amazing. And it's incredible that we found the zeitgeist for your audience.
Right. But also it's the partnership, because you paid attention. And that's the most important part, because you knew what it was, and this was very important. And to write a book like this, to invite your friends into them, it gets a little scary. You don't want to say something wrong, and then it might hurt you later. But you gave me the confidence to overlook my ego to be able to jump in and to do that. And I really, really recommend that, not just because of the services that you provide with the marketing that no other publisher does, but there was a lot of hand-holding that got me over the hump to be able to make this what it is, a success today.
Well, it's been so phenomenal to collaborate with you, participate with you, be a part of your success. And you've also brought in multiple clients to Beverly Hills Publishing.
Yeah.
So we truly are partners. And when you can recommend and trust and know that we're going to take great care of them, just like we've taken great care of you.
Oh, I mean, one of my, so there was a gentleman who had a great track record at land, but everybody thinks land is boring. With your help, we romanticized land for a book that he wrote, where he's raised tremendous amounts of money, because nobody looked at land like this, especially wealthy families.
Can we say how much money he's raised?
His goal is $100 million. I think he's probably like around a third of that right now.
Phenomenal.
Yeah.
And so this is proof that publishing a book in this way and in this strategy is disruptive, because other publishers would just think about book sales. Whereas what we do at Beverly Hills Publishing is we look at the marketing, the audience, and then also building the brand.
Correct.
So that you attract capital.
Yeah, I mean, today it's about personal brand. Everybody thinks that, they want to start a logo, and they get on LinkedIn and they have 6 people liking their company, so they get discouraged. Your brand is your promise, and everybody's investing in a personal brand today. Years ago, it used to be Pepsi, FedEx. Today, or even Facebook or Tesla. Today, it's Zuck and Musk. So the branding has shifted to the person rather than the entity today, and that's what attracts a lot of attention.
And you are living that, my friend.
With the help of you, of course.
Well, thank you.
I appreciate that.
My partner.
Yes.
And if you could sum up in one sentence, what would be your experience of publishing with me and partnering with me? What would be one sentence?
I'll tell you what one of the people who I thought was not going to write not going to want to be quoted in the book said. And he said, world class. That's not me. That's someone who literally my reputation on the line, because if I misconstrued anything he said, it might not have been, I would not be, let's just face it, I wouldn't be on the Christmas card list anymore, right? There would be a lot of problems. But she said it was like world-class execution, which is great. And you've talked to that person before, but it's world-class execution that people really liked, because it made them feel proud to give their book to people. And again, the audience is, the amplification of it. That's really, how I look at it. And for him to say that, those are his words, not mine, really meant a lot to me, because that meant that he felt confident and comfortable working with you. I already do, and I'm biased, right? But when you bring high net worth people with name brand families into your book, you got to be careful. You got to be. I mean, it's a risk. There's a risk, but anything worth writing about today that's controversial is either politics or something risky, right? Like maybe wealthy people don't invest in ETFs or something. They're like, what do you mean? I thought that's all they buy. No, not at all. But when you start slaughtering sacred cows and you're able to leverage the experience of people who are much more successful than you, and they feel as though they're very comfortable with you, that changes the whole dynamic.
Sal, what does your daily mental workout look like?
It's heavy. What I do is I wake up in the morning. The first thing I like to do is I like to go to the gym. There's a gym in my building, but there's also another gym sometimes I go to as well. And for me, that's perfect because it allows me to sort of get focused for the day. You have the blood running to your head. When I'm at the gym, I leave nothing. I like to listen to some podcasts, but if I need to talk to some maybe long-winded life science CEOs, I'll take the call on the treadmill when I'm cooling down because sometimes they put you in a holding pattern, right? So there's a sense of urgency that goes along with that. And then besides the content creation, I spend 50% of my time, my goal is to spend 50% of my time talking to current investors and new investors. And that is how I add value to the group, is making sure these guys are all warm, they all are listening, they're all opening my emails. I'm like, hey, I noticed HubSpot says low engagement. What's going on, Brian? Like that kind of stuff. But it engages them, right? It's nothing formal. It's like, hey, don't ask me if you can't invest in SpaceX again because you haven't opened my email in 2 months. HubSpot cut you off. Oh, no. So it's sort of like the re-engagement and bringing it all together. That's what I spend most of my time doing. And to me, that's a great day. And then outside of it, and it's a full-time job, is, again, I moved to Miami for a reason. And the networking is just amazing. So there's always something going on. And that takes time. So by the time I'm finished with you're going to love this, but by the time I finish all my calls for the day, it's usually 4 o'clock. I'll take a nap for an hour, wake up, shower, and then I go out to like a dinner or an event or a networking cocktail party or something like that. And again, with books, because I'm always out there meeting people. That's the value that I add to the franchise.
And can you also talk about your rocking chair ritual?
Well, I like, sometimes I feel excited and, I can't sit still. Maybe it's a twitch I have, but I live on the 56th floor of a building in Miami, and I sit outside because it's beautiful and it overlooks just about everything, Miami River, all the way to the ocean and the bay. And I sit in the rocking chair all day, and I just talk to people on the rocking chair, and they don't care. And I'm in gym clothes, and it's authentic to them, and they like it. It's not like I'm, sitting there like, what's going on? Oh, yeah, and it's fine, and people understand it. Some people don't like it, and I'll stop rocking or something like that. But to me, it's a way to keep the energy moving and the thoughts moving and things like that. Sort of like coming off the treadmill, you have like a Cuban coffee, which is very strong, and then I'm on calls for the rest of the afternoon. Yeah, the rocking chair is just a matter of personal comfort. Everybody laughs at it. Everybody knows it. Some people can hear it squeak, so I have to get a new one. But that's just it. Of course, we have an office that we use, but like people really like just
that you're real.
Yeah, just being real. Yeah,
and you're bringing them into your world. And whenever I'm on Zoom with you, I'll be like, "Hey, I'm getting dizzy now. Can you please?"
No, and I'll just block it off. All right,
But you have a beautiful view overlooking all of Miami and the water.
Miami Beach and everything.
Gorgeous.
Yeah, they had the. A lot of these ships come sailing by and everything, and it's really interesting to see, like the cruise ships, how big they are. And
well, that's part of the transparency of your brand. It's like people are investing millions of dollars with you, and so they want to know who you really are. You're not putting on a show.
No, and that authenticity, I've talked to some very, very wealthy people, and they dress like me too. And they, it's not like they're wearing bow ties and tuxedos for every meeting just because they're wealthy, right? But it has a lot of authenticity, and I just joke about it. Be like, in Miami, we don't shower after the gym. We don't shower before dinner. Because it's so hot.
That's the way to do it, yes. Like, multiple showers a day.
Yeah, multiple showers a day, right? So,
if you could speak to your 22-year-old self, what would you say?
You made the right decision. I think people today, when I was younger, it's interesting how you say this. People who are younger today, they I think there's a lot of shiny objects and they're going towards certain things, and then they they don't pay attention to where they want to be later on in the future. And one of the things was that I always wanted to see if what I'm working on today, is that going to move the needle anywhere for the next 5 years? And that, has, before I met you, that got me, started as a independent emerging fund manager with a real fund, from a Park Avenue investment manager to another one. And then at that point, moving forward to, well, this is interesting. Like, life sciences is not easy for someone to invest into, right? It's not, people don't want to hear it. They don't want to be quant-splained. They don't want to be reminded of high school biology and chemistry. And what I learned at that point is to always adapt and to build the skills. And if I didn't get into like copywriting and trying to talk to these families in a certain way, I don't think I would be with you today and enjoy the successes that we have right now.
I think that's really powerful, because marketing and being able to communicate your message, regardless of what industry you are in, it's one of the most valuable skills.
It's a skill set. It's a skill set. You got a talent stack, right? I mean, that's what, some people, I can't remember, Scott Adams talks about. It's like having a talent stack. Everything today, sales, writing, it's a talent stack that makes, when it's coupled on top of each other, really sort of has like it adds, I think, an exponent to the ability of how far you're able to go. And communication's a skill. A lot of people don't have communication skills. A lot of people can't write. There are emails I received that are 1,000 words in one paragraph. I can't read them. Like, it's just, it's unbelievable. And today you have to make sure that you have the skills to be able to market yourself in a way where people actually want to open your emails.
Let's talk about your writing discipline, because in this age of AI, where people are just basically regurgitating content that has already been published, how important is it for you to have the discipline of writing your thoughts and your original ideas and being a thought icon?
Yeah, I like it. It's something I've always done. Even going back to like early days, I used to write these investment letters that were like probably too long-winded, right? And so I learned a lot to be able to talk in a way that works, and to, getting to the point where to me, writing is therapeutic, if you think about it. I like it. I like writing. I've always liked writing. I've written a lot of books. I have, on LinkedIn, I post something every day. But I always make sure that I keep the authenticity of my voice. And the way I think about this, if you say, remember, your brand is your promise, I like to think about it as, Howard Stern. Okay, this is an extreme example. But Howard Stern was coming in to really success in the late 90s. And the reason is that whether you loved him or you hated him, his brand was, you never knew what he was going to say next. And if he never carried through with that, with any sort of authenticity, people would shut off immediately. They feel as though he had changed. And so I always try to keep the authenticity. And I have different ways that I do this, but I usually talk about things that I experienced in the field, or, mistakes I've seen people make, or maybe just like, the story of how I received the inappropriate deck pic on my iPhone, or maybe even through Instagram from some guy raising money who I never met before, and he just thinks I'm going to make casual introductions to him for people. That's not how it works. But I think that's really, if you look at it the right way, it establishes the boundaries of the relationship of the people who are reading it. And when you're doing that, the authenticity is so important, and people today are figuring out if it's real or not. And you can see that on LinkedIn, where some people write these posts in the third person, and it sounds really, really weird, like it came out of like a Raymond James or some sort of like compliance department, and it's not them talking. Nobody cares about that. Nobody can relate to that. And I think, if you maintain that authenticity, and that starts with being an author first, it's much easier to continue that, because at that point it becomes sort of like you're doing the reps as if you're bodybuilding. Does that make sense? You're
Absolutely.
doing the reps. Yeah.
And you can't fake it. You can't skip steps. And I know that I love reading your stories, reading your content. I've learned so much from you in the process of publishing this book with you, but I also follow you because I trust you, and I know that you are on the cutting edge of the investing conversation and capital raising. There's
just so much wealth that's going to be transferred right now for the first time in the history of this world, and a lot of it's going to wind up in the United States.
Can you explain that?
Yeah, you have the baby boomers who are retiring. They're holding on to a lot of assets. Those assets are going to flow down to their kids. Those kids don't know which way are up. They really don't. And they want to be involved in the business, but they don't know where to start or who to trust. And if you start out with authenticity, that's really the most important part of it, is like, this is how I would do it. This is, here's the playbook you wish your grandfather gave you, but he didn't. This is what it looks like. And it really surprises people to see like a lot of wealthy people own a lot of things that are not publicly traded, that are not, they own a lot of illiquid assets, because some of the, sacred cows I broke is liquidity is not necessary if you have too much of it, right? It's overrated. If you're like Armancio Ortega and you buy $1 billion worth of Class A real estate a year, he has a reason for doing that, because he has a lot of money that's coming in that he needs to deploy. See what I mean?
Mm-hmm. There comes a point where it's like a saturation point.
Exactly, yeah. And so people always want to know, what are the bigger brothers and sisters doing? What are the wealthier brethren doing? This is the book that explained it. So
where can someone follow you to get more of this cutting edge investing information?
They can follow me on LinkedIn, Salvatore Buscemi. There's a black and white profile photo of me there, just so you see it. And the same thing on Instagram, Salvatore and Buscemi too as well. And then you sort of see like behind the scenes of like the nightlife on yacht parties in Miami and and Instagram. And every week I always put up, because I'm out and I take a lot of photos, I do a week in photos, which people really like too. And I do that on the LinkedIn.
You make investing look fun. He's like, no comment.
I'll take that as a compliment.
Absolutely. Well, it's wonderful to watch your journey, and thank you for letting us all get a glimpse into your life and all the success that you're creating.
Thank you, Andrea. I appreciate it. Thank you.